Hello, I'm Wade McWayne and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. Now, in case you missed it, both the Dow and S&P 500 closed last week at another record high as the Santa Claus rally is delivering gifts early to investors. 2020 was a blowout year for the FAAMG stocks. That's Facebook, Amazon, Apple, Microsoft, and Google. Collectively, these elite tech groups command an astonishing combined market capitalization of $7.33 trillion. COVID-19 was a killer for many businesses, but not for the FAAMG companies. In fact, these tech companies are enjoying a blowout year as people shun physical activities around the world. Connectivity through the web is all that matters. Over the past 12 months, Apple and Amazon share price rose by 82% and 80% respectively. Big tech is simply too big to ignore, and most serious investors have a position in them. Even Warren Buffett, who famously shunned tech stocks for years, is sitting on a $100 billion plus position in Apple. Do not underestimate the fear of missing out. So looking forward to 2021, is there a chance we've seen peak Amazon? Well, everyone knows that Amazon is more profitable than ever before. In the 12 months ending September this year, the company's net income totaled more than $17 billion, compared to $11 billion a year ago. The juggernaut is churning out tons of cash. There are two reasons behind the peak Amazon idea. The first is that the pandemic is probably approaching its final phase. The introduction of vaccine marks a key turning point in the fight against the virus, and as the production of vaccines increases, a return to normality by this time next year is possible. Online spending growth may slow as a result, and when its lockdown restrictions generally loosen, consumers may redirect their spending into travel and hospitality sectors outside Amazon's niche. And then there is the law of large numbers, simply exerting its force on the stock. Did you know that a 100-share investment in Amazon's IPO at $18 is now worth more than $1.2 million US? That's a 700 times return over 23 years. Undoubtedly, Amazon has produced one of the greatest bull runs in the history of stock markets. Few other investments come close. Amazon had two distinct advantages then: a small base, which allowed the firm to grow rapidly, and a relatively tiny share of the overall retail market. Now, Amazon's operations are huge. According to some estimates, Amazon's share of the US e-commerce market stands at 37%, and the company employs 1.1 million workers. To grow quickly in the years to come will be much harder, and that's where the peak Amazon theory comes in. Not to forget is Amazon's mammoth market capitalization, which currently stands at $1.6 trillion. This hefty number equates to about 7.4% of America's GDP last year. Imagine, if Amazon were to grow as fast as it did over the past 20 years, what will its market cap be by 2030? Think about it. Is the number sustainable? Moreover, the European Commission in Brussels recently slapped Amazon for breaching EU antitrust rules by distorting competition in online retail markets. This issue will keep re-emerging as long as Amazon retains its growing prowess. A digital tax payment proposed by the French government is also an area of concern. But Amazon bulls will argue that these issues are parts and parcels of a company when it reaches the size of Amazon. Microsoft was also marred by these investigations, but emerged relatively unscathed. Furthermore, as Amazon expands into streaming music, online pharmacy, and online gaming on top of its fast-growing cloud and advertising businesses, the firm's bottom line will continue to expand. It's true that Amazon is one of the most innovative companies in the world with an enviable market position online, and its financial results are secure. So shorting the company is simply out of the question. What might be an idea is selling part of long positions when the stock rallies further, as one of its long-term investors, Scottish Mortgage, did recently. The fund said that while it has huge respect for Amazon's vision and ability to execute, it feels the firm's starting capitalization of over $1.5 trillion makes the path to large future returns more challenging. Looking back to 1997, few anticipated Amazon become one of the greatest investments the world has ever seen. It made its founder, Jeff Bezos, by far the richest man in the world, and many shareholders happy. Trackstar IQ, our proprietary search tracking tool, routinely ranks Amazon as one of the most researched stocks by both retail and Wall Street investors. The days of fast growth, however, may be ending, and a lot of Amazon's future growth may probably be priced in already. A telling sign of this comes from the market's reaction to Amazon's latest quarterly report, namely record profits, but a yawning share price. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. Remember, make sure you do your own due diligence before making any investment decisions.